What is up, YouTube? This is Roger with Modern Wealth Channel, and today we are talking about what is the stock market. This is my part 2 video of Stock Market for Beginners 2025 series. Thanks for coming in and watching. This is basically going to break down very simple analogies, very simple English. What is the stock market? The stock market could be a very complicated thing, has its own language, has its own jargon. It can be intimidating. But you don't need to learn all the in-depth things like I did. I was a financial advisor at one point, so I had to take tests to get licenses to sell securities and bonds. You don't need to know the in-depth stuff. It's boring and it's way too much for a simple investor to learn. What I want to teach is something that, in my opinion, should be taught to every freshman, to every 14-year-old in high school in a finance class, and that is the basic building blocks of the stock market. Let's start. Before we can wrap our heads around what a stock market is, let's talk about the most basic building block. What is a stock? At its heart, a stock is just a little tiny ownership of a company. That's it. A simple analogy, a good way to think of this is, let's say your local pizza shop wants to expand and buy new shops around the country to sell its pizza. Then the owner needs money, and they're going to divide their ownership of the pizzeria into, let's say, 1 million pieces. And an investor who wants part of that ownership will buy that slice and give the money to the owner so they can use it as they see fit in order to make new stores, try new ingredients, different pizzas, whatever. So as an investor who puts money into the pizza, you are now part of the company. You can have voting rights depending on how much of the company you own. Or you can get dividends, meaning if the pizzeria expands and does really well, then you can get a piece of the pizza place's profits as an investor. And that's what owning a stock is. You are now a part owner and you can have some benefits. If the pizza place grows, your stock grows with it, and you get benefits such as voting rights and dividends, meaning parts of the profit of the company. If you are a business owner, or if you're a pizza owner, then this is the best way to raise capital for your business. It is not a loan. You don't have to pay interest. You don't even have to pay the money back. When you take your company public and you do what is called an initial public offering, you are selling shares to the general public. And investors give you their money, which they can spend on hiring people, buying new ovens, buying new shops, and everyone benefits. The business owner benefits by having more cash, and the public benefits by being able to grow with its company if it is a good company. So we know what a stock is. What is a stock market? Think of a superstore where you can walk in and buy clothing, food, electronics, but instead of buying items, you're buying shares of different companies. Let's say you walk into the store, in one aisle there's Apple, in another aisle there's shares of Nike, and in the other aisle there's shares of McDonald's. That's a stock market where you can go in and buy these things for money. Nowadays, it's not physical anymore. There's no papers involved. It's all electronic. So the stock market is mostly global networks of exchanges like the New York Stock Exchange or the NASDAQ. These are the platforms where buyers and sellers meet electronically to trade shares. When you decide you want to buy a share of a company, you put an order in with a broker, and that broker goes into an exchange, aka a supermarket, and finds someone who is willing to sell you a share. And that's what happens at the exchanges: buy, sell, and that's what determines the price of a stock as well. And in this constant flow of buying and selling is what makes the stock market work. The price of a stock is determined by the timeless principle of supply and demand. If there are more people willing to buy a stock, then they are putting in a little bit more money to buy, and that makes the price of that asset go up. On the flip side, if there are more sellers, then there are people selling their shares at lower prices to get rid of them, so the price of that stock goes lower and lower as they sell it. So what drives all this buying and selling? Well, that can be determined by a bunch of things. The revenue of the company, the growth, the profits, a new change in CEO, a new product lineup coming up. Nowadays, a tweet by the president can drop a company by 20% in 1 minute. So there's a lot of things that can be tricky, and stocks usually look ahead 6 to 9 months. So you have to be ahead of the game. You have to be knowing Be forward looking to know where a stock price can go. All right, so a quick summary. If you understand this page right here, you know more than most people alive and you are ahead of the game. The stock market is a platform where people buy and sell shares of publicly traded companies. It's like a giant marketplace where investors trade ownership stakes in businesses represented by stocks. Companies issue stocks to raise money, and investors buy them hoping the price will go up as the company grows. Price fluctuate based on supply and demand, company performance, and the broader economic factors. Key components: stocks, exchanges, investors, and brokers. If you understand this, you are ahead of the game and you are ready to start investing. In my next video, part 3, how to invest in the stock market, I'm going to take you step by step for a beginner to start getting your feet wet in the stock market to make some real money. Tune in for the next one. Thanks for watching this video. Drop a like and subscribe if you want to follow for more. Peace.